Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at basically two or three things, and that is the 60-day cycle, because there's so much going on there, as well as looking at the overall picture on the weekly chart. I'll also have a look at the dollar because there's some interesting developments going on there. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, let's get cracking. And before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So what is this warning to the Bitcoin bears, and why I believe the next Bitcoin move will actually shock everyone, and we need to really pay attention. It's not going to happen today or tomorrow. It may happen on Wednesday, of course, because of the FOMC meeting, but more likely it's going to happen between now and in the next few months, and I think it's going to actually take everybody by surprise. It may well be a massive move from 2,000 to 10,000 or even more. So we've got to just be aware of it, because when it comes, it will actually take everybody by surprise. So I'll go through that a little bit later, but what I want to do now is to actually concentrate on the 60-day cycle and give you some insights into what's been brewing. What I'll start off saying first of all is that between now and actually the halving in April 2024, we need to take a cautious but optimistic view of what may happen in those many months. And the reason why I'm saying that is that currently we've had a very positive bounce from here at the 24,900. The fact that we came back down to these levels, which tested the previous 3-month low, this was actually quite bearish. But what we've got on the daily chart here was a tweezer bottom, i.e. a big candle to the downside, then followed by a big candle to the upside, creating this little tweezer at the bottom. So that usually is a bullish sign. So out of the bearish scenario, we've got a bullish scenario being actually created. And I'm going to have a look at the candlestick pattern as they're developing over here as well, because it's quite interesting what's developed over here. But before I do that, I want to just show you on the weekly chart, because this candle closed yesterday and we need to be aware of it. And I mentioned this in the last week's video, with this big red candle here, followed by 3 indecision candles and this long wick at the top. Now this usually would be a bearish pattern to the downside, i.e. a 3 or a 4 bar play as they call it. So this would have been really on the higher probability side, a continuation pattern from here. However, when you get these indecision candles with wicks to the bottom as well as the top, there is always a chance that we might get this candle here, which is the outside bar candle. And being a green outside bar candle, this is obviously a bullish candle, which gives the momentum to the upside. And this is what we've got to be aware of. And they're very, very powerful candles, these outside bar candles, especially at the bottom of a downtrend. This is what we call an outside bar candle, where the body of the candle totally engulfs the body of the previous candle. That means there's momentum shift going to the other side. Just like at the top over here, we got this bearish engulfing candle, which was a big candle engulfing the previous green candle, and that was the first sign that this may well be coming down. This candle pushed this down, and on the reverse of that, this now should push the price to the opposite side. And it gives me hope that we may get past the middle of the cycle here, higher than the 7-day high here, to give us a right translated cycle. So we'll see how that develops, but certainly on the weekly chart, there's some very good developments. But when we look inside this candle, we need to be aware of the daily candles and what they're telling us as well. So far, what we've had is a bullish bounce of the 24,900 on a tweezer bottom over here. And the next point of resistance is going to be this candle here at around about the 28,100. And when you put a line on this one here, it goes all the way back to this level here. You can see there's a lot of price action as well as resistance here. Then there was support at this point. Then we got more resistance here and resistance here. So it is quite a good line when we got that resistance over here, of course. So the next point of resistance is going to be this point here. But because this is only one candle in the recent history of the price action, I think the more likely resistance point is going to be around about the 28,800 to 29,000. So it's going to be this underside over here. So this is what you've got to be aware of. It's going to come back up here, probably break up there, but this is where it's going to have a rejection, more likely. And so far what we've had is a fade below this line here with this candle, and then it's jumped back up again. So this is what they call the fading. A strong neckline, this time at around about the 25,000 level. We dipped below it here at 24,900, and it's been bought up very, very quickly. And when you look at the volume, you can see why that happened, because there wasn't a lot of selling here. So when you look at the volume, there's not an awful lot of volume here compared to what it was when we came down here. There was a lot more volume here, as well as over here, there was a lot more volume at this point. So there was quite a bit of selling pressure down here, but not at this point. So this has turned out to be what it was designed to be, i.e. a fake out. So this can certainly be seen as bullish in the short term. And this candle here at 24,900, this was the candle that really trapped a lot of the short sellers, i.e. the bears. And this really was the warning to the bears, because when we got this candle back up again, that was the warning that this is not going to go much further, at least not in the short term. I did actually take 50% of my long-term holdings, which I'd been carrying from over here all the way up to here with the Bitcoin miners. Because of the developments of this failed cycle here, and the bearish developments on the weekly chart over the last 8 weeks, it prompted me to take 50% of my long-term positions to protect myself from riding it all the way down to these levels back again. With one of the Bitcoin miners having a dilution event last week, that fell by 15%, and that prompted me to buy back the 50% with a 15% discount to the Marathon holdings. So that was the reason why I bought back, because at that point the risk reward ratio for me swung back to the reward side, and I was prepared to go back down if I had to, as long as it didn't break this level here. This was the important level, 24,750, as I've been mentioning over the last many videos now. So I'm back invested 100% in my long-term portfolio, but there is a swing trade opportunity with the Bitcoin miners. So there'll be a short 3 or 4 minute video just explaining the opportunity that I'm hoping to take with the Bitcoin miners today. So the question I'm asking in the video title is why the next Bitcoin move will shock everyone and why we should all pay attention. And that is with the upcoming ETF announcements that can be anywhere between now and most likely around about the middle of October, as been mentioning before. But really, the proper decisions might not come until the beginning of the year. So between now and the halving, I think you're going to find that that event itself, and we've already had one taste of it, which was this candle here. That was the Grayscale announcement. And this candle was only a $2,000 increase. But I think, from what I can gather, in my own mind, when you look at some of these big decisions, when they do come through, sometimes they can be $5,000 or $10,000 increases. So the impression I get from having read around this is that there's a lot of people waiting on the sidelines to get into the Bitcoin. And if there are ETFs available, there's going to be a huge amount of retail demand that may well push this price from these levels here, or where we are now, around about 26.5, all the way up to this target that we've got between 40 and 50,000, more likely 48,000. That could well be the catalyst. And by the time that comes, we may have created a very good consolidation pattern along the way. So wherever this decision comes, anywhere around here, the consolidation that we've had all the way along here, this will be a very good catalyst for a big move to the upside over here. And it may well take it all the way from 40 to 50,000, anywhere in between that. And of course, this is where the pi cycle is. Currently it's at 48,000. And the RSI, which is smoothed over the multiple time frames, that indicator is also around about the same place again here, which is around 44. So anywhere around the 44 to 48,000 seems like a likely place to come back down and have a correction. But we could get a massive move up to that point very quickly once the ETFs are announced. And it's for that reason that between now and the halving, I would not really want to be out of my long-term positions unless I hit the $44,000 to $48,000 mark now. So from a risk-reward ratio, for me anyway, and everybody has to make up their own mind, everybody has to make their own decision and own it and take responsibility for their decision. And I can only tell you what I'm doing, and that is that my long-term portfolio, which I bought down here, as everybody knows who's been watching my videos for a long time, that position now will not be actually affected until we get to the $44,000 to $50,000 mark. The risk to the downside is not worth taking. with the ETF decisions on the horizon between now and the end of this year. So the main thing for me is as long as we stay above this candle here at 24,750, the narrative has to be to the upside rather than to the downside. And this day 7 high so far, it looks to me as though if we can get past the midpoint here and get above this point, we may well end up with a right translated cycle for a fall into the 60-day cycle later on, which is going to be higher than this one here. So we could have a higher low at this point and a higher high here. And that would then be ready for the next leg up for the next 60-day cycle. So what looked very bearish over here last week has now suddenly started to look quite bullish. So when we go onto the weekly chart, you can see there's some sort of a consolidation pattern now developing over here. And this consolidation pattern would provide the absolute wonderful consolidation and a base for a big move to the upside. That could be over here. As soon as you get the ETF news, I think you'll find that we're going to break this neckline at the 31. And this is where the big move will surprise everybody, because not everybody's expecting it. But certainly I do see this kind of pattern developing for the next few months. And then it has a choice to make over here. Do we break the 31 and then go off to the races to the 50,000 and then meet our first peak that I've been talking about for the last 8-9 months? So only time will tell, but something to be looking out for. As I mentioned in the introduction, I want to have a look at the dollar because there is something quite interesting developing here. So we were on a free fall from the 115 mark here all the way down. And then we were going to be expecting this to come back down to these strong levels here. But we had a bounce with this tweezer bottom here. And so far, and it's very rare you get this pattern developing, which is 9 green candles all in a row on the weekly chart. And if you look back in history, you'll find that this is very, very rare. And the last time we got this 9 green candles on a weekly chart was back here in 2014, 9 years ago, when we had about 12 green candles all in a row here. But it was very different circumstances because there we were in a bull market for the dollar and it was on a big rise here. Conversely, we are here in a downturn. So this is what I would call a counter trend rally in the dollar. And it may well be on Wednesday when we have the FOMC meeting to decide the interest rates. We may even hit this resistance line here before coming down. So this looks like it's ripe now for coming back down again. So only time will tell, but this is certainly a development that we're coming to the resistance point here, and that takes into account this gravestone doji candle with these levels. Very, very strong resistance point. So I'm expecting the dollar to now start falling. And this should obviously be very good news for Bitcoin. Like I said, today I just wanted to concentrate on the 60-day cycle because there's some interesting things developing, especially on the weekly chart, as I've shown you. And I wanted to bring that to your attention, that be aware of this ETF decision that's going to be coming between now and the end of this year. It could be in October, it could be at the beginning of next year, it could be any time. But when that comes, that will be a big catalyst for a big move to the upside. And for me anyway, and I can only talk about myself, it's not a position that I would like to be out of the market at that point. Just looking at the risk reward, it's far better for me anyway to be in the market rather than out of the market. I wouldn't want to be risking that. And everybody has to do their wider research to see what they want to do. Okay, so I'm going to leave it there. For the Bitcoin Miners Club, I'm going to do a short video on the swing trade opportunity that is around the corner here. And if you want to join the Bitcoin Miners Club, which is a video that we do every Wednesday, and we also do bonus videos when there is a need to do that in between those Wednesday videos. So today I'm going to do a bonus video on the swing trade opportunity that is there, which I'm hoping to take today when the market opens. So if you want to join us, all you have to do is go to any of my videos, click the link button here, and you'll see that there are 2 options. And this option here, the first one, will come to an end very, very shortly in the next couple of weeks. So if you want to join, it's best to join this one here, which is higher because the prices are going to go higher from the 1st of October. Because if you join here, then it'll cancel within 2 weeks. And then you'll have to join this one anyway. So the best thing is to join this one here, click on that button, and then you'll have access to all the videos of the past and the current information on all the Bitcoin miners. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you want to leave any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.